Hi, everyone. Thanks for joining today's webinar. My name is Jan Perillo. I'm with Rixtrema, and I have with me Stefan Sinarakis, who is from Plan Plus, which is a Morningstar company now. And today we're going to be showing you the Plan Plus risk profiling tool, and also how we've integrated the Plan Plus risk profiling software from FinaMetrica, the questionnaire, into our Rixtrema's portfolio crash testing tool and RegBI optimizer tool. So without further ado, I'm going to turn it over to Stefan to begin today's presentation.
Thanks, Jan. So when you log into FinaMetrica, this is the view that you'll see. This is the advisor dashboard, and what you can see here is your risk distributions. We do have different types of risk distributions here. One is the 5 risk groups and one with 7 risk groups. 5 corresponds to the 10-question questionnaire, and the 7 corresponds to the 25-question questionnaire. Basically, the 25 question is a lot more in depth. A lot of advisors like this over the 10, mostly for high net worth clients, but some use it for all their clients as well. And what the risk distribution does, it just shows you a quick overall distribution of all your clients and where they fit. In my case, there's only 2 that have been performed so far, and they both happen to fit in the same group. But as you add clients and as they complete the questionnaires, the distribution will fall. We've seen over time that it will fall into more of a standard curve that you are used to in statistical analysis, the bell curve as they call it. The dashboard also allows you to be able to very easily search for clients up here, as well as quickly add a client if you want to just get started. And has some other information here that shows you how many questionnaires were sent, how many were completed, and how many are coming up due for review, as well as some news and alerts here. And other items like which ones were recently completed and which ones are coming up due for review. So they'll be listed here for you as well. On the next screen is where you can look at your clients. So this will give you your entire client list. In my case, I only have 1 client, and they've completed the questionnaire twice before. So we're going to start with a new questionnaire. By clicking on the new questionnaire button here, it brings up a menu. It'll default to the version that was there previously. You'll see the 25 was defaulted before. And then you'll have the default items here. So what will happen is if you keep all of these together, as soon as you create the client, it'll automatically send an email to both yourself and to the client. Both of these are checked off, asking the client to log in, go through the process, and complete the questionnaire, and then it'll notify you back to say that it's been completed, and you can go ahead and take a look at this. And the client will also get a report as well. So let's step through the process really quickly. Now you have 2 items here. Like I said, if you create a questionnaire, it will send an email, but let's say you have a client that you have in the office and you want to do it right there on the spot, or they're not really that comfortable with technology and they want to just do it on paper and bring it into you. You have the option of completing it for them as well. It'll basically just launch a version of the questionnaire that they would see as well, and we can just go through the questions themselves. I'll just step through the questions one at a time. And if you want to review the questions themselves, we do make them available on our website, and I can also, with Jan's blessing, I can make them available to the attendees here as well after the webinar is completed. Okay. And you'll notice some of these pertain to Canada because this is where this client is set. So we'll submit the questionnaires. Now we have a couple of demographic questions here as well. These don't really go towards the actual risk tolerance itself. This is more for our statistical purposes. You can choose to include these or not include these. It really depends on your preference as well. But we do use this information to kind of help build our our database overall, and also be able to keep our questions up to date and fresh, and so on. And we do work with financial institutions and also with educational institutions too, like the London School of Economics, where we do a review on a yearly basis. Okay, just finish off the questionnaires here and submit. Great. So now the risk tolerance questionnaire has been completed. I'll just go back to the client list, and we'll see that the second questionnaire has been completed as of today, and we have a risk tolerance score of 59. So what does that mean? Before we jump into that, I'm going to show you, actually no, let's jump into this really quickly. So there's a couple of options here. We can add a note to the report. We can actually save the report as a PDF and view the report. So we'll just click in there and view the report, and you'll be able to see what the client sees themselves, because we have a couple of extra information here. So right away, we'll see that the 59 actually correlates with a high risk score here. And there's some information with regards to what the high risk score means. It shows the actual range itself. And this is also made available in the report for your client as well. So what is this? So what does the risk group mean overall with regards to an investment class type mix? We also take a look at the differences overview. So we do have a set of questions where we do take a look at the differences, and in some cases we'll see, for example, that some of these questions may have been answered inconsistently. In other words, they could be outside of this high range where the majority of the questions are. And we'll take a look at another report where that's the case. And when that happens, the system will also make a bit of a recommendation. So for example, if there's one or two questions that are a little bit outside of the range, depending on how much outside they are, it could make a recommendation of an adjusted score by about 2 to 4 points, depending on the severity of the variance. But if there's a larger inconsistency, then it'll actually give you an alert to say to the advisor or to the client that this is a good chance to have a conversation with your advisor, rather than giving a recommended adjusted score. It'll still show the tolerance, mind you, but again, it'll prompt the user to say, the user to go and talk to their advisor about this to ensure that everything's good from that perspective. It gives the actual responses to the questionnaire, so you can see how they answered if you have any curiosity. So if you see some differences that are outside of the norm and you'd like to see why, you can see how they answered these questions here. A bit of a demographic, the responses to the demographic questions, if you've included them, are here as well, so you can see those. And then the portfolio gap analysis. So what this means basically is you have an analysis compared to these portfolios that you can set up yourself. So I've got 4 test portfolios here. And before I get into this, let me actually show you how to set these up. So basically, you have your portfolios here, and you have to declare what's called the growth assets. So basically, this is growth versus fixed income type assets. So you have either like a 20-40 or a 20-80, sorry, or a 50-50, 60-40, and so on. So adding a portfolio is quite simple. Just click on Add, give it a name, and then put in the growth asset number here that you feel is appropriate. So I'll put 60 in this case here. And then click Save. And it'll put it in order by the percentage of the growth asset. And it'll tell me that we have a best fit of like a 57 through a 65 score. But it'll also show me what ranges are okay versus the marginal on either side, and then of course the too little or too much risk on either side. So you can add these very quickly yourself. And when we go back to the client, and we take a look at the report again, and we go to the gap analysis, we can take a look and say, okay, here's my test portfolios. We see that we have one here that's in the green, so if I click on it, it'll show me, based on the actual score itself, where it sits. So the 59 is at about here, just in the marginal range. And I can compare it to the other portfolios that I have as well. And then it'll give me a historical performance of the portfolios too. So you can set these up as you go and actually set them up on the fly as well through here. There's also an overview on how we use the risk tolerance and how we come to the understanding of what the risk tolerance is and how we use it with regards to how an advisor can use it for their line of business. There's some footnotes with regards to risk and risk tolerance and how psychometric testing works. Again, this appears in the report itself. Some file notes, an opportunity to add some notes, which again are reflective in the report. And of course, the signature page. So it lets you take a look at the signature page and what that's going to look like. Again, you can download this report and have your client sign off on it so that everyone is in the loop. So this is basically FinaMetrica. Now we do have a new product that's actually come out with relation to this. Just to touch on it really quickly. So Plan Plus Global, being a company that historically in Canada we're known for our not just for our risk tolerance, but also for our financial planning software as well, where we've partnered with FinaMetrica for many years. Now that we're one big happy family, we've decided to create a new product called Suitability Pro, which takes the FinaMetrica piece and the financial planning piece and marries them together into one product, but it's also modularized as well. So if you just want the risk tolerance piece, we do have that as well. Adding the portfolios is a bit more complex in the sense that now rather than having the 60-40 just growth assets as well, you can actually do it by asset class. So if you have a specific portfolio that you wanted to do that way, you can. We do have another module which lets you do a model portfolio, which has full Morningstar access as well. So that's where FinaMetrica is evolving to. So at some point, current users will be offered the ability to upgrade at no extra cost right away to be able to take advantage of that system in the future. So that's where we're headed right now. So we're in the middle of rolling out the last pieces of that product. Any questions?
We'll probably have a questions section at the end, which Nick will moderate. And I did fail to mention that if you want to ask a question, please do put something into the chat. It will just go to Nick, who is our host today, and he'll either ask the question webinar.
Okay, so we do have some questions that have come in for the FinaMetrica side. First question from James is, can historical FinaMet risk testing outcomes be retained in the system for future review?
Yes. Take a look at a client here very quickly. You'll see that I have a test that I've done previously here, and I can review this at any time. So this will be retained in the system today.
Okay, and another question from Carlos is, why does some data reference Canada S3.0?
So over the years with FinaMetrica, there's been an evolution of the psychometric questionnaire. So as we collect more data and we do more research and we work with the other institutions that I mentioned before, we do update the version. We do update the test in order for it to be more reflective of people's behaviors. So we're on currently the third version of this test right now that we've revised over the last 20 years or so. So that's why you'll see an S3 version. So that's just basically the third version of the psychometric test that we have. And we do, like I said, we do have two sets of tests, so we do maintain two separate versions, but we try to keep the version numbers the same. In other words, when we revise one, we'll have to revise the other one as well to ensure that they're both at the same high standard at the time. So they're both at version 3 right now of their respective tests.
All right. Thank you, Stefan. What I'm going to share now is that we have an integration here with FinaMetrica. And I'm going to show you just how easy that is in our applications here. So hopefully you can all see my screen here. And this is our product called Portfolio Crash Testing Pro. This is a product which does portfolio risk analysis, scenario analysis on different your client portfolios, and it does accept virtually any asset type. So stocks, bonds, derivatives, can all be put into this system, and we can do a risk analysis on it. So I'm just going to quickly come in here and show you how easy it is to do a FinaMetrica risk profile. So here I have my clients set up, and these are easy to add new clients and match clients to portfolios. I'm not going to do any of that today, but you can see that I have set up my FinaMetrica risk score previously at a 59. Up above, I have some other ones which are set up. We also have a built-in risk assessment. The reason we partnered with FinaMetrica is because they've been the leader in risk profiling for years. And a lot of our clients use FinaMetrica, and so it just made sense to not have another risk tool or have your clients have to go through another risk assessment. And it also gives you a little bit of flexibility to choose the one that fits into your workflow better. But if I wanted to set Mr. Clapton up with a risk questionnaire, I can either do our risk questionnaire like this, send this off to him, or I can just use FinaMetrica. And all this does is this launches exactly what Stefan was just showing you. So it comes in here, and it brings in Eric Clapton, and I'm the advisor, and I can go ahead and do everything that Stefan just showed, which I'm not going to repeat. But once I'm done with that, the effect of it is the risk score comes in. Okay, so if I want to come into this portfolio here and look at the risk of it, I can do that. And this is now my FinaMetrica risk score. It's at 59. So I'm looking at this portfolio risk, this 60-40 portfolio risk, coming in with a portfolio crash rating, which is our assessment of the riskiness of this 60-40 portfolio against the risk questionnaire. And so what that essentially means is we're doing this on the same scale, and we're saying how close this portfolio matches with the client's tolerance. If you want to increase the risk, all we have to do is kind of drag this, and it will suggest trades here. We have different ways to optimize this, and you can do full optimization and things which will be beyond the scope of this call. But if you have, for example, a buy list, you can have it match the risk tolerance by doing this with a full buy list, and it'll come up with the best kind of match for this new 59 risk questionnaire risk score portfolio. Okay, but what we have here is we have a series of scenarios. Any one of these scenarios, the most valid one today is probably this one. This one we came up with a little while ago, which is the 2020. At the time it was a potential. Now it's I need to change to be reality. But basically, what would we expect for this portfolio in the pandemic? And this is showing an 11.2% loss. It makes some assumptions here, obviously, about what the pandemic might look like. Quite frankly, the market risk that I had in here was a 20% market decline, and we're a bit beyond that. So if you wanted to come in here and adjust it, you can do your own custom stress tests in here. So for example, I've adjusted this to be a 30% market decline, and maybe I want to see something closer to a 75% decline in rates or something like that, or 75 basis point decline in rates. And this is what would happen to this portfolio. This is what we would expect to happen to this portfolio in this. We can save this custom scenario as a new scenario, come over here, and it would be added into this list. We just choose from the add that in there. So this is a pretty powerful tool which allows you to really extend that risk conversation. So after you do the risk tolerance questionnaire from FinaMetrica, or you use our risk capacity questionnaire, which is a more quantitative rather than a psychological look at risk, you can have a pretty complete conversation. And why don't I just jump in at this point into our risk capacity. Like I said, I'm just going to touch on this product really quickly. But our risk capacity shows a few different things. So right now I have a $1 million portfolio. The crash rating of that portfolio was a 55, and I have a tolerance crash rating of 59. That was all established in those first screens. Here's some of the personal information about the client: the age, when the person expects to retire, the investment, savings, and what the client desires from the terminal value. Okay, and what this does is it runs a series of simulations that says, okay, what's the likelihood of that? And given these savings and this terminal value and this starting value with 25 years to retire, it's saying this is a pretty likely success story. Like this client is pretty likely to come out to meet or exceed their goal. What that means is that they have the capacity to take risks. They could suffer some drawdown because only a couple of these come out below the line. So what we've done is we've married that to the other scales, the other scores on the scale. So the portfolio score, the questionnaire score, these are all comparable. So you can have a complete conversation. And this is really useful when you have big differences in a client's willingness or psychological willingness to take risk versus their capacity to take risk from a financial perspective. So you might need to have some of those hard conversations where a client is very willing to take risk or very unwilling to take risk, yet they need to or can take risk. It's just another way for you as an advisor to really understand the outcomes for that portfolio. Why I'm starting there is because all of this is really important for RegBI as well. So not just in a market like we have today, understanding risk and understanding outcomes, but also for RegBI, which is the rule that the SEC implemented, or is implementing as of June 30th of this year, which is called Regulation Best Interest. And essentially, it says that advisors, broker-dealers, advice given must be in the best interest of the client. Conflicts need to be disclosed and things like that. We have an ebook on this topic. It's free. If you'd like it, please let me know. Please let us know, clientsuccess@rixtrema.com. We will send it off to you. Like I said, it's free. It's something that we developed as we were in consultations with different law groups about this product, and we thought that at the very least, advisors, our clients are confused or unsure about what to do about RegBI. At least give them something to read. It's not a sales piece. So, anyways, we have that. This is the RegBI optimizer, and it looks very similar to portfolio crash testing. For example, I come into these clients, and here's the same information that I had. Eric Clapton still doesn't have a score. I still have my 59 and my 71, my $1 million portfolio. So what this product does is it gives the assessment of, is a rollover suitable, or at the very least walks the advisor through the steps needed to make the assessment that the recommendation is in the best interest of the client. Okay, so let's go through this recommendation wizard here. I'm going to choose the same client that we were just using a moment ago, and I'm going to do a transaction here. I'm going to do a 401k. I'm going to say that this client, happens to be my name, Jan Perillo, is going to roll out of his 401k, and I'm going to put him into an IRA managed by the advisor. Okay, current portfolio held by the investor. It's already loaded. If it's not if this happened to be just a portfolio that you were already managing for a client, you can add a new portfolio or select, maybe you've already loaded it into the system. You can select a new one that isn't currently under your domain under your advisement. Okay, I'm going to keep this one, but you do have the flexibility of doing that. All right, and then we say, what are you proposing? What is the advisor proposing for this client? So you can add, again, you can add a new one, which is pretty easy to do, or I can go to my portfolio models, which are all set up here. And let's say that I'm going to do a moderately aggressive portfolio, which is a crash rating here of 58, which is very close to the FinaMetrica recommended score of 58.9 for the client. So let's start here. I'm rolling out of a retirement plan, of a 401k plan. One of the things that we have to do is we have to look at that plan as an advisor and understand a little bit about it. We don't, it's not a deep dive, but the client leaves this firm, wants to roll out their 401k. Those are ERISA assets. So what we have in here is we have a built-in 401k plan database. We have another tool which is built for prospecting 401k plans. It's a pretty robust tool. We have another one that's designed to evaluate plan holdings. We've taken that information and basically put necessary components to do a RegBI rollover into the RegBI optimizer. So let's do corporation or something like that. Delta contractors, Delta controls. Just pick one of these. And what we see is this plan is not audited. So what we can do is we can bring in the holdings for audited plans. So that's another step that we can take to help advisors understand what the portfolio looks like. So we can bring in those holdings, but this we can also bring in a plan menu. We can also import it manually. So if we don't happen to have the holdings in the system, we have for about 85, 90,000 plans. We can do a previously loaded plan. So I can do this 401k demo. Okay. On to the next screen. It's asking a couple of questions. This is an existing client. I've already have this client. Any comments that you might have? These are the individual factors for that client that are very important for doing a RegBI rollover. One thing that is important is knowing if the participant, if your client had the opportunity to roll into another plan. You can also do the same analysis on that new plan. So that's an important bit of due diligence to be able to say that you did when you're doing the rollover. I'm just going to say no here, and that's going to go away. But we have questions based on solvency. Is there any reason to believe that these assets shouldn't be touched in a 401k because the client might be, financially at risk? I mean, like credit protection that's offered by ERISA. So these are questions that could at least be answered and understood as you go through a rollover. And by documenting that here with any comments, you'll memorialize that in a PDF at the end, which basically summarizes the due diligence that you've done. There's notes, there's places for basically every piece of information. Okay? Loans, circumstances. It's pretty in-depth. And like I said, we worked with one of the top law groups in the country, Groom Law, one of the top ERISA attorneys, to really make sure that we were hitting the right notes with this. Okay. Conflicts. Are there conflicts? What are they? This is very important because RegBI, unlike the DOL rule, doesn't say that there can't be conflicts. It says they must be disclosed. Okay. So here's a place to do that. There's also going to be a place to attach your Form CRS, which is another component of it, which nobody has a Form CRS yet. So once that happens, there's going to be an attachment for the Form CRS in here as well. Customized services. This is important. Basically, what are you giving the client that they don't currently have with their existing provider, with their existing 401k, whatever it might be. This is fully customizable and flexible to say there's a lot of value that you're giving as an advisor to this client to justify the rollover. Okay. And what you can see is we're getting a quick summary of the plan, the total fees. You can put in the advisory fees, et cetera here. Total fees, Sharpe ratio, risk tolerances, and all this kind of information. Importantly, a fee benchmarking is important. We have that here as well. Any plan red flags, so any things that might be concerning that are in the current plan that they're in now, they're might be a rationale to pull out of it. Summary of all the answers, like I said, as we scroll down, and then positions. What we have now, what we're suggesting that they roll into, which is the moderately aggressive portfolio that I suggested, and then the retirement plan menu. Here. I load it up. Okay. From here, you create a PDF, and it simply creates something that client. You create that for the client that you're sending this to. Choose your own logo. You can be white labeled essentially, so your firm's logo, not ours, is on there. Name of the report, any comments that you want, and then you create the report. Okay, so that's pretty simple and straightforward. We have an admin tool in this, which shows every report that's ever been created and leaves it is basically available at the click of a button. All the reports that have been done through time, so that you kind of have a record. Obviously, you can take that PDF and download it and put it on your own desktop. But this is kind of nice too, where you have all these different demos, or all these different portfolios rather. They're demos for me, where you create a record, a time series of who the client was, who the advisor was, if it's a bigger firm. And what the PDF was. So you click this and you get access to the PDF. Quick view of what those are. In here for larger firms, you can also put rules, which is really handy. For example, if commissions exceed something, I, as the compliance officer, want I want a pop-up. I want to be warned, or I want to put a stop on it. I want to put a stop on that rollover, stop on that recommendation. So you have a lot of flexibility with rules that we're not going to go into here, but if you're interested, we certainly can do that offline. And I mentioned PCT earlier. PCT is built in. It's a light version of what I showed you a moment ago, but at the very least, you can do a comparison and things like that. So there are a lot of different things that you can do in this PCT Lite version, which are a little bit different than the PCT Pro, but the functionality is here. We still have the same pandemic. We have some of the same, I believe these should be all the same scenarios, and you can still add and edit the scenarios from a huge library of scenarios. So that's the RegBI optimizer. Like I said, it's pretty flexible, pretty easy to use, and pretty quick. And come June 30th, there's probably all of you, there's going to be some need to prove compliance with RegBI. So that's the RegBI optimizer. Do we have any questions on that?
Currently, there aren't any questions, Jon.
All right.
If anybody has any questions, feel free to write them in the chat.
Great. So like I said, this is a pretty straightforward tool. The point of today was to kind of highlight how it works with FinaMetrica tool. Right here, it shows the before and after and the FinaMetrica tolerance rating. And really, because risk is part of the due diligence for RegBI, we thought it was important to include a light version of PCT. We thought it was important to include FinaMetrica risk profiling. Basically, just give the advisor all the tools that we thought were necessary to help ensure that you were acting in the best interest of your client and able to document that fact. This, as you saw, I walked through quite a bit of it. It probably takes about a fraction of the time to actually do than I just showed. We tried to make it really easy and streamlined and somewhat quick for the advisor to just get something documented, ready, done. And we've tried to add some value as well with portfolio crash testing, functionality, and things like that. So that's the RegBI optimizer. And if you guys have any questions, please ask. Otherwise, I would thank you all for your time. Stefan, how can clients reach you if they like to?
I'm sorry, you faded out there, Jan.
Oh, sorry. How can clients reach you if they have any questions or want to reach out about FinaMetrica?
They can simply email sales@planplus.com. I usually moderate that during the North American work days, and I will be happy to respond to any queries.
Great. And for us, it's client success, all one word, client success at Rixtrema.com. And we're going to have a version of this webinar available on our blog. The blog has a lot of information, podcasts, detailed my thoughts about the coronavirus and what it went into that pandemic stress test that I created, comparisons to SARS and things like that. So there's a lot of good information on our blog. It's updated pretty regularly, and hope you all visit. And thank you very much for taking time today on a very busy market day.
Okay, Jan, we've got a question from India asking. He's a FinaMetrica user. And asking, does PCT provide support for non-American securities?
Absolutely, yeah. Great question. It is a global product, and in fact, we have different risk models as well that we can access. It's not available in the front end, but if you were wanting to look at the non-US model and look at a global model, we could certainly set that up because we have PCT is built off of our institutional product, which has different risk models for different regions of the world. And we've had, Australian clients, clients in the UK, clients in Norway, kind of all over the map. So it absolutely does accept securities from all around the world, pretty much without limit. It is a global tool. Absolutely. And again, any asset class, stocks, bonds, basically as long as it's covered, or we can get terms and conditions on it, we can put it into the tool. By the way, we can even have the ability to cover things like annuities and structured products. We've built some pretty robust functionality around structured products. So if you have anything like that in your client portfolios, and they have, something like not, the first 10% of the fall is not going to be borne by the client, but anything after 10% or the worst of 10% from the S&P 2000, for example, the worst of that, the first to fall 10%, we can do things like that, and this can be incorporated into stress tests, and this can be incorporated into all kinds of functionality that we didn't get into in PCT Pro. So if you have questions, please reach out. Happy to. All right. Thank you very much, everybody. Have a great rest of your day.